Hello and welcome to Ava Talks Crypto. I'm Ava, and I'll be bringing you all the latest news stories on what's happening within the crypto space to help you make sound financial decisions in the crypto market. Today, we'll be covering stories about the CFTC-Binance lawsuit and how this affects crypto market liquidity. Binance's CEO calls the lawsuit from the CFTC an incomplete recitation of facts. Experts have opinions on why investing in Bitcoin is the best bet against inflation, and EU lawmakers will vote on setting payment limits on anonymous crypto wallets to curb money laundering. To start things off, Binance reacts to the CFTC lawsuit after it was caught off guard by the US CFTC's decision to sue the company for violating trading regulations. For years, Binance has avoided establishing a permanent headquarters and has been talking with the US government and other regulators about compliance. Binance founder and CEO Changpeng Zhao, or CZ, wrote that his company didn't agree with the allegations coming from the CFTC, touting that his company is working hard to comply with regulations and has been improving their compliance technology. CZ also noted that he only had 2 Binance accounts and wrote that the CFTC's complaint filed against his company contained an incomplete recitation of facts. CZ also said that he didn't agree with the complaint, calling it unexpected and disappointing. The lawsuit, which was filed in the U.S. District Court for the Northern District of Illinois, contains allegations that Binance and CZ directed employees to use VPNs to spoof their locations. However, CZ stated that Binance has 750 people on its compliance team, with many of them having backgrounds in regulatory and law enforcement. He also noted that Binance had 16 licenses and registrations worldwide and has been cracking down on employees and volunteers who are actively teaching people how to circumvent Binance's KYC system to illegally access the exchange using the Binance platform. Let's move on to our next story. The crypto market has been dealing with poor liquidity ever since the FTX collapse last year. Experts say that the lawsuit could worsen the market outlook for crypto. The CFTC sued Binance and its CEO for running an illegal exchange and a sham compliance program. The CFTC, which is in charge of overseeing the commodities and derivatives market, including Bitcoin derivatives, sued Binance CEO Changpeng Zhao and former compliance executive Samuel Lim for knowingly breaking U.S. trade law. Binance has long been the leading exchange for digital assets in the world, with one of the biggest shares for global trading volumes. Experts think that the lawsuit against the company, which involves 81% of all Bitcoin traded, could have a big effect on how well Bitcoin does on the market. Analysts say that the main worry about the lawsuit is what it will do to the crypto market's liquidity. If investors take a step back from trading on Binance, crypto market liquidity may be reduced even further. This can drastically affect the trade value of Bitcoin and other cryptocurrency. It is likely that the lawsuit will make the already strained crypto market even tighter, which could hurt liquidity. However, some expert observers say that the market will likely recover. Bitcoin will likely revisit the former resistance at the $25,000 level. It's a significant drop from the $28,000 value, but it is not as bad as expected. While it's clear that the CFTC wants oversight on all exchanges done in the crypto market, the market is reacting prudently, and many investors are holding their breath for more negative news. Ever since the lawsuit against Binance was announced, Binance users have withdrawn around $400 million from the ETH blockchain. Many investors are afraid that the lawsuit could lead to another implosion similar to FTX. Many investors have already lost a lot of money to bad actors in the crypto industry. Bitcoin and other cryptocurrencies are taking a hit from the Binance lawsuit. According to one expert, the lawsuit isn't good news for market valuation as it adds a layer of uncertainty. It is expected that people will react negatively and sell the digital assets in fear of Binance imploding, which will have a drastic effect on the crypto market. However, analysts agree that the market's reaction won't be as bad as the FTX implosion. We will cover more of the story as it develops. After the U.S. Federal Reserve announced the increase in interest rates by 0.25%, investors and economists agreed that it would only prolong the economic turmoil. Although strong economic data justified the hike, it will also tighten credit conditions, which will have a negative impact on businesses, households, and the economy. Fed officials still see slow growth and more hikes in interest rates in the future. However, There is also reassurance that the Fed will do everything necessary to stabilize the economy. Many experts and analysts believe that the federal funds rate should exceed the rate of inflation for a sustained period to effectively curb inflation. People are worried about protecting their assets from eroding away due to prolonged inflation, but there are some indicators that investing in digital assets can help. Bitcoin has been chosen as the best thing to invest in because it can maintain its buying power. Trustworthiness for the digital currency is also up, and it also has high levels of liquidity. The way the economy is right now makes it clear how important digital portability is, since it is easy to transfer digital information. El Salvador is a great example of a nation taking full advantage of Bitcoin. When El Salvador's president announced that he was going to make Bitcoin a legal tender of his country and buy 1 Bitcoin each day starting November 18 last year, many were skeptical and criticized the decision. Now, El Salvador is slowly curbing inflation and protecting their economy as well as paying their debts. El Salvador is one of the most successful nations that has fully adopted cryptocurrency into their economy. It was a risky move, but betting on Bitcoin proved to be a winner. El Salvadorians are now using Bitcoin as payment for goods and services, just as they would with a fiat currency. While the US market faces uncertainty around banking, El Salvador's bet on cryptocurrency looks to be working. The El Salvadorian government has invested millions of dollars in Bitcoin since it began purchasing the digital asset last year. However, they are able to do so with a steep discount. Using El Salvador as a model, we can see the potential of cryptocurrency and how it's not affected by the financial and banking crisis in the United States. El Salvador showed the world the large-scale adaptation of cryptocurrency. If people invest in cryptocurrencies, it may be the best way to protect their assets from the inflation that we're currently experiencing. Many crypto experts say that investing in cryptocurrencies can protect people from inflation and have cited El Salvador as an example. Moving on, the European Parliament has voted to impose limits on anonymous crypto wallets. This is part of the organization's large-scale attempt to overhaul money laundering laws. The market is changing at a rapid speed, and there are new ways for criminal organizations or even hostile nations to cover their financial tracks by using various ways of money laundering methods. Due to the nature of cryptocurrencies, they were previously used as a way to transfer money illegally and make it difficult to trace. The European Union Anti-Money Laundering Agency, or AMLA, added measures to forbid businesses from accepting large cash payments. This includes payments coming from unverified crypto wallets. 99 lawmakers voted in favor of the new law, while 8 members voted against the limits. One lawmaker said earlier that putting limits on payments doesn't mean that crypto payments can't be made. There will be a cap of €1,000 for unverified crypto wallets, but this won't apply if the payment goes through a regulated wallet provider and the identity of the person or organization is known. The new measures were proposed after strings of dirty money scandals shook the bloc. This included the Pandora Papers leaks and the processing of Russian funds through Danske Bank. The vote within the EU Parliament means negotiations can begin within the member states that wanted to outlaw cryptocurrencies that permit anonymity. The Parliament is also expected to give its final approval to make sure that the people who send money from crypto wallets can be identified whenever transfers are made. EU lawmakers assure crypto firms and users that the new anti-money laundering law will not block crypto payments. It is only taking steps to identify users of crypto wallets to prevent criminal organizations from using them to clean dirty money or use them as a way to fund criminal activities. French lawmaker Damien Kermey is one of the 2 lawmakers leading the negotiations and has stated that the move is to prevent dirty money from flowing into other sectors. These are the latest news stories happening in the crypto space today. Thanks for watching. Don't forget to hit the like button and subscribe to our channel. You can also hit the bell icon to get notified every time we upload new videos. Again, this is Ava from Ava Talks Crypto. Have a great day.